I heard USDA loans don't require a down payment. Can I get one? Hold up. Before you get too excited about that zero down USDA loan, because while yes, USDA loans are amazing with no down payment required, there are 5 crucial things you need to know before assuming you can get one.
It's important. I really need to know what you're talking about.
Hi there. I'm Ella Gurfinkel, Senior Loan Officer with 30 years of experience and over 2,000 families served. Today, I'm going to break down exactly who can and who cannot get a USDA loan. Don't like or subscribe yet. Wait until you see if this program actually works for you. Let me start with some good news first. USDA loans are incredible if you qualify. We're talking zero down payment, zero. Lower mortgage insurance than FHA, often better interest rates than conventional. And you can even roll closing costs into the loan without having to negotiate from the seller a seller concession. But here is what most YouTube videos won't tell you about the USDA loans. Let's break down the 5 major requirements that trip people up. Location, location, location. USDA loans are only available in what they call rural areas. But here's the thing. Their definition of rural might surprise you. I just closed actually a number of USDA loans pretty much right outside a major city limit. Let me show you how to check if your dream home qualifies. Here is the USDA map. See this? Everything in the light areas is eligible. And guess what? Some of these areas have shopping centers, great schools, and new construction. And they're right outside of major metropolitan areas and many times. They're not all farmland like people think. You're not buying a farm. You're buying a single family home. Not a duplex, not a triplex, not a fourplex. You're buying a single family home or a townhouse, sometimes even a condo, if it is in the rural eligible area. Number 2, income limits. This is where it gets really tricky. USDA looks at all household income. Let me say it again. All household income, not just the income of the borrower applying for the mortgage. That means that you have an 18-year-old working part-time or your spouse isn't on a loan, their income still counts. The income limits vary by area, but typically we're talking it's upwards of $100,000, 1 to 4 person household, and it goes up from there. Every county is going to be different. But again, this information is freely available. Here is the link where you can check for the income limits for the county that you live in or the county that you may consider moving to. Number 3, credit requirements. Here is some good news. You don't need perfect credit. Let me say it again. You do not need perfect credit for USDA. USDA typically wants to see at least a 620 credit score, no recent bankruptcies or foreclosures, clean rental history, and no collections over $2,000. USDA does want to see, in addition to the credit score, a well-established credit history. Number 4, property requirements. The home must be your primary residence in good condition. It must meet USDA's appraisal standards. Basically, they're following FHA standards, meaning health, safety, no peeling paint, no broken windows, no dry rot, nothing crazy, no caving in roofs, no leaks, no major issues. And typically we're talking a single family home. Again, single family home. You cannot buy a duplex, triplex, or a fourplex with a USDA. Yes, you can still look at a townhome or even a condo if it is in the USDA eligible area. Now, number 5 is the tough one. Number 5 is probably my least favorite piece of the USDA. Whereas the zero down, the location, the single family, even the funky way of calculating the family income, all of these are not negatives. But the debt to income ratios that USDA actually uses, that, my friends, is the biggest obstacle to many people getting into a USDA loan, in my not so humble opinion. And the USDA ratios are essentially set in stone. Your proposed housing payment cannot exceed 34% of your gross monthly income. That's roughly a third of what your income is, and that is a big limiting factor as far as I'm concerned. Now, your total debt to income ratio, meaning all of your debts, including the proposed housing payment, cannot exceed 41%. There are some exceptions where we can push it a little higher, but we're talking a smidge, 1 to 2%. Still, it's the smallest qualifying box out of pretty much any and all mortgage programs that I've ever touched in my entire career. Let me give you a real example. So a couple of months ago, I helped a family buy a $350,000 home with zero down using USDA. Their payment, including taxes and insurance, came to $2,200, actually less than what they were paying in rent. But here is what made it work. They found a home just outside the city limits. Their household income was under the limit for the county and the family size. They had good credit, and the home passed the USDA appraisal. But let me tell you, there is one biggest mistake I see people make with USDA loans. They fall in love with the house, then find out it's not a USDA area. Always check the eligibility map to make sure that the home is actually located in the USDA boundaries. Here is what you need to do if you're interested in a USDA loan. Check if your area is eligible. Verify your household income is within limits for the county the home is located in and for your, again, entire household, not just the people applying to the loan. Get your credit in shape. Talk to a lender who actually does USDA loans and knows what they're dealing with. Because here is the thing. Not every lender offers USDA loans, and even those who do offer them know how to properly structure them. So from the bottom of my heart, I want you to know that this amazing program could actually work for you. So book a free consultation with me using the link below. We'll check your eligibility, run the numbers, and address your specific situation. Now that you know the truth about the USDA, if you found it helpful, now you can like and subscribe. And I'll see you in the next one.